Broadcast. I want to welcome everyone to Global Markets Radio Daily Recap. I'm your host, Andrew Spanton, with half of a voice, at least. Wednesday, February the 29th, 2012, 4 p.m. Eastern. What a day. What a day. Can you say outside candles? Can you say Hamata and shooting stars and Ben Burn Your Asky? Not helicopter Ben. Dropping the bomb. Now, the funny part is that the markets believe this guy that he could hold rates till 2014. Who knows if he's even going to be the governor of the FOMC, the chairman. He's going to be out of there, hopefully, with Obama. Gone. Maybe not. But still, who's to say 2014? U.S. numbers knocking the cover off the ball. Interest rate differentials coming into play. Dollar index looks like it wants to rally. Stock market reversed. Dollar yen strong. Oh, baby. Dollar yen, it's all about treasuries rallying, interest rate differentials. Now we have QE 20 in Japan, and now we have the U.S. stopping. So now that's two things. Reasons why dollar yen should be going at 85. And that was your pullback. And now we take out the highs, and we go to the next level. Oh, yeah. 85.50, 86. Come to Papa. The train stopped. Got a little engine, little oil. Lube up. Now ready to go. Bang! Oh, baby. U.S. numbers. Chicago PMI, a blowout. Unbelievable. 64. GDP in the U.S., 3%. Now, I did think the euro was going to take out. I definitely thought the euro was going to go. I thought we had three good news. You had the LTRO. You had GDP out of the U.S., better. You know, Chicago PMI, better. And it was just like, hey. But then all of a sudden, of course, as a trader, you've got to be able to reverse and get out and realize, hey, this is serious stuff here. Market's been up, way up. All the good news is out. How much more is there? Bang. And that's what happened today. There's a classic sell in the news. All you need was to light a match and Bernanke changing his stance a little bit. That's all you got. That's all you needed. Was enough to reverse the dollar. Says the same crap anyway. But clearly, the U.S. numbers are looking very good. And clearly, if you get good numbers out of China again tonight, this sell-off might not be all that much. I mean, you look at the S&P. It's a gorgeous reversal. But who's to say we can't come in quick and boom, the bulls will be right back in your face. All the good numbers. But this is a gorgeous outside candle. Closed relatively close to the lows. S&P looks toast. And what we're building here is a nice head and shoulders. Gorgeous. There's your neckline. You say left shoulder here, whichever one. Bang, bang. We come in maybe one more day. Try and futz around here. Roll over. There's your neckline. Sayonara. I can see it. Or it's a suck you in type rally, a sell-off. Gets the bears all short. More good numbers out of the U.S., more good developments, and boom. Because listen, there are some that are going to say, well, wait, if things are good, we're going to see how this economy is without life support. We're going to see how the market can handle higher rates, how the banks can handle less of a spread. But that'll take time. And, you put the brakes on now, and then you're talking about going into 2000, counting, the election, going into the end of the year, counting on the patient. His stitches are still not even healed, out, for that matter. But, you could make the case that numbers are good. Well, the question is, why are the numbers good? Are the numbers because government or because there really is demand? Because CEOs really, starting to see higher demand. Do you believe that there's going to be growth? Do you believe the consumer is going to be back? And I don't see it. I don't see earnings. The only thing I see where the S&P can go up is because of multiple expansion. And that's psychology, no matter how you want to slice it. We take a look at gold. Absolutely collapsing here. And then that's a very important indicator for the seriousness of what Bernanke did today. Because he basically took back his 2014. Now it's all conditional. And all you need, it seems, where he'll start to panic. And let me tell you something. The openness of the Federal Reserve is where this is going to mess with the market's head. He might go back and forth a couple of times. We're going to know every time he goes back and forth. Is he nuts? Or then he's going to lie because he doesn't want to tell the truth. And then what's the point of being opaque, transparent in the first place? Hello. So let me tell you something. This move in gold is real. Step out of the way. Gold could collapse. The gold market was counting on Bernanke not being as hawkish as he was. And I think the only way you get gold to head back up is a weak U.S. jobs number. Tomorrow, jobless claims. Next week, we get non-farm payroll. You get a strong number there, he's going to start to chicken. Because there's enough of the other Federal Reserve governors that are squawking like, you know what, to hit the brakes. I personally think it's way too early. I do think the federal funds rate could be zero, but I think mortgage rates should be locked. I don't think the U.S. consumer should get hit. I think the banks that are making all this freaking free money, those are the ones that should not be allowed for that to happen. Raise the discount window. Do something like that to penalize the ones that are making free money. Ow. Okay. So, again, we look at this gold chart. And there's another day in this thing. Absolutely. Easy. So, then we look at our commodity currencies. Had nice reversals. Gorgeous shooting stars. I mean, when you take a look at this Aussie, oh, baby. Can you say break it out to break it down? Bang! I just can't believe there wasn't more to it. Pretty much nailed that. Was able to get short 108.20. After being long, thank you, sir. I have another. And it's still coming in. Outside candle. And again, remember, I'm doing a webinar tomorrow, Thursday, March the 1st, with FX Street. I'll be posting links on Facebook. I'll be tweeting it out. So feel free to register for that free webinar from the link I'll provide. Should be good because the correlation has been hot. Great examples to show you people. You take a look at this Aussie. Take a look at the S&P. Lockstep. Finally. But, you say to yourself, why was this thing holding back? It was holding back. Well, maybe a lot of the insiders knew this was going to happen. Truly believe that. Because this thing should have been a lot higher, and it wasn't. Someone knew. But we'll take it. And there should be nice follow-through tonight. I'm not saying we collapse. Because who knows it. Listen, if China's numbers are better, all bets are off. Remember, we got a shooting star. That's great. But you need bearish engulfing. You need the continuation of it in order to really sink your teeth into saying, all right, this is it. We're getting another candle. I mean, look at this thing. Gorgeous. Should we come in? Absolutely. But, all right, that's only 70 pips. So again, I think you take your trade. I don't know that we're going to melt down. I'm not convinced because a lot of players in this market, this could be a buying opportunity. I don't know if you remember Apple, but Apple, when it went through 500, sliced through it, went to 515, 526, I think, collapsed $35 down to $495. By the next day, it was down a little bit, and then gone. Closed the next day at 505. Next 5, boom, done. It was a 2-day event. So if you're bullish, you probably get an opportunity to buy this pullback. Because this is a gorgeous looking shooting star. Cable looks freaking gorgeous. Typically, I'd be shouting, sell, sell, sell. But sell, but be cautious. Because I don't necessarily know. You got to have that bearish engulfing. We got to take out the lows. We do. We should easily come down to 158. Be a nice 100 pips. Whether or not we collapse down to 156.50, you would think we do. All you need is bearish engulfing. Get that, should be good to go. And I think a weak China number, anything under 50, oh yeah, say goodnight. But I'll tell you, take a look at some of the other currencies we're going to talk about. Sterling yen looks awesome. Look how nice this is closing. Nice bullish engulfing. New closing high. Gone. Look at the double bottom. Interest rate differential. Japan is still stuck. London's possibly hitting the brakes to the moon. And again, all of a sudden, dollar, you start to think again as a funding trade. And we could be talking, 85 on dollar yen, easy. That happens. If you trade sterling yen, you know what happens. This thing is going to keep going, especially if you're sterling, which looks like death. Rolled over. Should certainly come in more. Love it. Should be a relatively easy night trading. And again, hopefully you got my twits. I was bearish at 11 o'clock, baby. Once that candle happened, that was it. Once Bernanke, gold moving, collapsing down, that was your go sign. And you look at this dollar counter, you could have gotten it in all day. Why this thing was so weak, I have no idea. U.S. numbers, beige book, all that, yada, yada, yada. I think it had more to do with the euro getting slaughtered, Euro Canada. But you know what? It broke. But who's to say? I think it's a long. I think it's a buy on pullback. I think if gold comes in more, this baby's going to fly. Be a nice trade. But I'll tell you what. I want to be long Luna yen. This baby's gone. Love it. Been bringing this to your attention for how long? And that's a Dennis Gartman one, too. Bang, zoom, to the moon. Baby's got 85 written all. Well, wait. A little higher. 84.50. Easy. And I find it hard to believe you can get there on a collapsing S&P environment. So, I don't think the market's going to be down that much. I think it's going to be down. But, maybe we come right back tomorrow. And then they rip them and close them strong for the weekend. You never know. I don't trust this market at all. But today was the first time you really saw some serious selling. The pressure was there. The volume was there. There was a veracity to the selling. And you look at this Aussie yen. I mean, this baby looks like it wants to go more. Broken out. Believe me, I wish the market was going up. It'd be a lot easier to be in these things. But dollar yen, again, is the trade. The euro might come in more. Cable might come in more. But I want to look to buy sterling yen on the pullback. Aussie yen tonight on the pullback. Luna yen, even Kiwi yen. The Kiwi yen still looks good. You got triple roll trade tonight. Maybe they'll bring them in. Triple interest. But again, 11 a.m. Eastern, I'll be doing the webinar on the correlation between the S&P 500 and commodity currencies, specifically the Australian dollar. And again, I have, remember, follow me on YouTube, Voice of Forex. I have no voice, obviously, for this Euro Canada. Oh boy. Looks like there's more to go there. Because again, dollar Canada, who knows? I think it might even make a double bottom. Euro Canada certainly should have follow through. Euro sterling, Euro everything. And pound Aussie could now start to make a move. This hammer continues to hold. Again, look at that baby. If the market's going to come in, this thing goes to the moon, Alice. So, again, if you have any questions, email me, info@globalfxllc.com. I have a premium service. Email me if you want more info about a 1-week free trial. Dollar long, baby. Buying dollar yen on big pullback. Yen carry trade on big pullback after Chinese numbers. The only voice you'll ever need who truly loves to make you money. Have a good night.